And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody. Welcome to Coach's Playbook. I'm here live with Dan and Mick and Hogue, and Hogue's dog might make an appearance shortly.
Yes.
Just giving a little bit of a sound check right before we came on here. Today, we're talking about trading. It's not all or nothing. You know, it's not like war or peace or things like that. You hear all or nothing a lot. Trading is not that, and we'll explain what we mean shortly. But Mick, do you have a shout out for us today?
I do. Give me 1 second here. Shout out to David Benavidez, up about $3,100 on the day right now.
Awesome. Great job, David. I want to kind of explain what I meant by that title we have there. Is I think something we've seen funded traders struggle with at Top Step, and I think it probably just expands the retail in general, is regardless of the size of their stack, we see far too many people trading the same way. And I think the example I use, and the numbers will differ depending on your resources and how much your risk tolerance is, but we see a lot of people who seem to trade a 20K balance account like it was a $300 account, right? Or basically, no matter how big your account is, you're still risking it all in an attempt to get the sort of returns that just aren't possible in that short a time. When you start talking about quadrupling in a month or something like that, to make that possible, the sort of risks you're taking are going to overwhelmingly result in you probably getting beat up at some point. So I'll pass it to Hogue here first to kind of give your thoughts on this. Go ahead.
Sure. I think the all or nothing mentality is one of the things that tends to take traders out of the game way too early. And I mean, this is all a learning process. This is all something that's everybody says it's a marathon, not a sprint. And you know, learning to size correctly, learning to manage an account does take some time. You know, the traders that have that mentality, like, okay, I'm funded, I've got this much money and I'm going to double it in this amount of time, and I'm going to double that in this amount of time. You end up putting yourself behind the 8 ball. It's one of the paradoxes of trading, that if you're chasing money, you're not going to catch it. If you follow a process, then you can create a process that can pay you money for a long period of time. And one of the other things that this title tells me is it's not all or nothing. You know, even if there are some losses, even if you lose an account, it's not the end of the game. It kind of goes back to the risk not thy whole wad. You know, you got to be smart about the way you address the markets, and you address the markets according to your account size and to your trading knowledge and strategies and all of that. I mean, this is something that I've quit trading probably 1,000 times, and I've always come back the next day, and I've left and come back, and it's never been an all or nothing kind of thing. It's been a process through my whole life in trading, is learning more and more about being able to make money and to take advantage of price movement. And not just that, it's about learning about yourself too.
Absolutely. Yeah. And to put those sorts of returns in perspective, the most successful hedge fund of the last 2 or 3 decades, right, is Renaissance. And I think that over that time, their average return per year was a little over 20%. Okay. Or from a film perspective, if you watch The Big Short, when Michael Burry at the end, I had to look this up. I won't share it. It's just a picture of it. Writes that number on the whiteboard at the end of what they returned after all that. It was 489%. So from that whole trade afterwards, that's what it looks like to quadruple or quintuple something. It's a huge thing. And you'll notice earlier in the movie too, even though he's getting hammered and there's angry investors, he's still posting per month, like down 10%, another 11%. That's actually, even though it's supposed to be reckless in the movie, that would be closer to like the good side of risk management from what is often seen in retail, where we see like in a day losing 50% of the account after taking time to build up. And those just aren't things you can survive really, because then to get back to even, if you lose 50%, you got to make 100% of what's left just to get back where you were. So Mick, you're the risk manager here. How's this sound to you?
Well, I think when it comes to all or nothing, you have to think about, what are you doing here trading? I mean, do you want to have supplemental income over time? Or do you want to make this a full-time job? And a lot of the traders I speak with, they want to make it a full-time job. If you're going all or nothing, how are you going to make this a full-time job if day in, day out, your, one outcome is nothing, blowing out? It's not sustainable. I remember when I was getting into trading early on, a lot of the veteran people who were down on the floor, they told me, if you just break even your first year, you're in really good shape. And at the time, I thought that was a little crazy, but that was for me getting started. You can't risk everything on a daily basis or weekly basis for your account if you want to, do this as a living or do this 1 year from now, 5 years from now. You need to take calculated risks, and all or nothing is not a calculated risk. It's stupidity. I see a lot of traders tell themselves that, I want to average $2,000 a day on my winning days. That kind of stuff's unrealistic because you can only take what the market gives you. Risking everything is not a way to get anything. Not in this business. You really need to make sure, I tell traders this, a lot of people come here thinking about making money. That's the offensive side of the business. You really need to be focusing on defense first, preserving your capital. If you can preserve your capital and take calculated risks, you can get returns. But if you're not taking calculated risks, if you're not preserving your capital, you're not going to be in this business later on in the future. Whether it's, you're trading your own account and you blow out and lose all your risk capital, or worse, you lose more than your risk capital. People lose their life savings doing this, or you're a Top Step. You can always come back to the trading combine if you find you're not successful in your funded account. That's kind of a unique situation here with us as opposed to trading on your own. So you have to think, and I'm kind of reiterating what I've already said, but like, do I want to be doing this 5 years from now? Can I be doing this 5 years from now? And if you're going all or nothing, you're never going to make anything in the future from trading. You could certainly find short-term success where you might make a bunch of money, but if you make a bunch of money early on, and then you're still risking all of that, you're going for all or nothing, what's going to eventually happen to that money? I mean, you have to think about the odds here. If you're always risking everything, at some point, your trading risk is going to catch up to you and you will have nothing. I don't think there's ever a circumstance where the opposite of that has happened.
They don't comp the whales at the casino and give them the free rooms and stuff because they think they're sweet at gambling, right?
Right.
They know, because even if I could win, well, I can't, but if someone wins $1 million at the casino, they'll give me a free room. And it's not because they lost $1 million. It's because they know if they can keep me there and I keep betting that way, they're going to get that money back and then some.
That's a pretty good analogy. I like that.
Well, also, I'll throw it to Dan right after this, is you talk about doing it for a living. And I think a good way to think about whether you could do something for a living is, could you theoretically get hired doing what you're doing? And if you were to try and get a job at a prop shop, the one thing every single place is going to ask you for is they want to see your book. They want to see the trades that you've made in the last year, 2 years, whatever
5 years of performance usually.
5 years of performance. But really what they're going to be looking at, what's going to get you hired, is if they see these sort of just pop a shot, making stuff, and maybe you came out on top, but it could have been luck. Even if it's a lot of money, that's not going to mean as much as if you had a smaller stack and you were showing that you were being consistent. And one thing I would look at, if I was trying to hire someone at a prop shop, I would be like looking right away at what was their biggest drawdown and what % of that was the available capital. And if it was like 50%, I would continue to be nice, but I would be going to the next interview, kind of checking out.
It's very good you brought that up. I mean, it's not very impressive to make $100,000 and then lose $100,000. You know, what's more impressive is to, make $30,000 and not really have much more of, a small drawdown to that.
Yeah. Dan, you want to throw your hat in here?
Yeah, absolutely. I got a lot of thoughts on this kind of concept here, right? All or nothing, I think it kind of applies in two factors. Emotionally, yes, you have to give it all or nothing. You have to be emotionally involved. You have to be attached to what you're doing here. It's not just a jump in, do a little here, do a little there, and think you're going to be successful. But from a financial standpoint, which I think really what everyone mostly cares about when it comes to trading. I mean, you don't get into trading unless you're thinking about the dollars and cents that are go along with it. If you are, good for you. I haven't met anyone that gets into trading because they just enjoy trading and they don't care about making money. That's really what it comes down to. So for me, the way I look at it, like you guys are saying here, you're spot on. You can't come in and think you're going to risk everything. If you have, let's just call it $5,000 in your account, that's what you're trading. Your expectations have to be realistic. To expect that you're going to turn that 5,000 into 15,000 in a month, I don't think that's what you need to be thinking. You need to be thinking, how can I incrementally grow this account? If I have $5,000, I have to think about, like Mick said, the defensive side. What's my risk? What can I do if I continue taking losses or if I hit a downturn to create longevity in this account? It's not about gambling and saying, hey, I got a little bit left, let's see what happens. It's about, okay, how do I control this? And so I look at it, if you got $5,000, you got to minimize that risk. How are you going to make that $5,000 last for 10 straight losing days? Those are the questions you really have to start asking yourself. And you go, okay, I got $5,000. I want to make this last for 10 days. I know what my losses are. I'm not risking, more than $500 in a given day to continue to see this thing grow. But I can only risk 500 if I have consistency and my books are showing that regularly my positive days are greater than that. If they're not, you have to rein yourself in just a little bit more. So really, that's what it comes down to. It's about slow incremental growth. It's not about taking the shots. And you talk about gambling, that's where my head instantly goes. You can come in here, you can gamble all day in trading. I get it. Everyone has talked it. You have that gambler's mentality, or I started gambling, or I started revenge trading. And those are the things that are going to bury you as a trader. If you come in and say, okay, you know what? I'm going to double my units here. I'm going to go 2 instead of 1 unit on my trade, and I'm going to look for this thing to really take off. You're gambling, you're burying yourself, and it's going to create bad habits. Maybe it works at one time, which is great. Hey, it worked, but that's the one time you're always going to remember. You're not going to remember the 12 times it failed and it buried you and it went against you. And that's what it's all about. You have to set yourself up for success. You have to be consistent in that approach, and you have to constantly think about where I am at financially and how can I make this grow? Not saying I have $5,000. Let's see what happens. I got access to 10 contracts. Like, if that's your approach, you're in the wrong industry.
Yeah.
That's not what you want to do here.
Not everyone out there, this is just the truth, has the ability to trade like the best traders in the world. But I think everybody has the ability to at least approach trading, or even in some ways trade like the best traders in the world. And whenever you see an interview or they talk about the way they trade, the best traders in the world, you hear about the painstaking, the research they put in, the way they test strategies, and most of all, they have very defined what their goals are and where they're getting out. Versus, every once in a while you'll hear about a rogue trader somewhere who, who is his name? Nick Leeson or something like that. That's just committing fraud at that point. So is what it is.
One thing I want to add into this too. As a trader, we don't have a ton of controls. We have 2 controls really, and it's where we get in the trade, where we get out of the trade. Beyond that, we're at the market's mercy. So take advantage of the controls that you have. If it's not a good trade, don't get in it. Or if you're in it and it's starting to go against and it's not setting up well and you don't like what you're seeing, get out of it. Those are your two controls that you can guarantee that you can control. So you know you can stop your losses at any given point. You can control that. You don't have to continue to push it and think today's the day I can bring this thing back. Likelihood of that happening, minimal.
Yeah.
I think everybody has touched on the idea that the whole gambling / casino thing. I think what we're basically saying here is you don't want to act like a gambler. You want to act like the casino. You want to line the game up so it's in your advantage.
Yeah. And we'll turn it positive here because I want to make sure we're not, thank you for that, Hope, that we're not just scolding or something like that. But you're absolutely right about looking at that way where a lot of people that I know, or even myself, I go to the casino, I pick out at the beginning, and I would say this is not what I would, there's similar things to trading, right? I take the amount of money that I'm going to withdraw from the ATM and I go there thinking, okay, I'm going to try and really rip this up and I'm completely fine losing it all. That's a decent way to go into a casino and, get a couple comp gin and tonics or whatever. But you can't treat trading that way, nor if maybe I have a lower risk tolerance. If I were in a casino, I took out that money and somehow I turned it into, I don't know, 10 grand or something like that. Well, then the trader in me would just come out and be like, I'm not going to put this all on red or whatever else, right? Or just double down. The cash management stuff is just too ingrained in my mind right now. I would just kick myself afterwards. So I hate seeing people find themselves in a situation where they, take a big loss like that. Definitely.
One thing I want to mention before, we wrap this up is, people call themselves traders. They call this trading. It is the business of money management. That's what you are doing. You are taking risk in hopes of finding rewards. So you're managing money. And I don't think there's any place in managing money for, risking all of your money whatsoever.
Yeah. I suppose you would have to have something of 100% confidence, and you're not going to find that in trading outright futures.
Yeah, I don't think anybody who's been doing this for a little while can have full confidence in directional bias that they have. You likely are smart enough to know that anything could happen. So you can't bet the farm on one direction one time.
Oh, yeah. And I take it back. The reason you should never do this is because from a risk management standpoint, you should never do that. But if you do know, it probably means you have insider information. And me as your virtual non-attorney will tell you that's a terrible idea as well. So, yeah. So I think that we've hit on everything here. I'm fine to start wrapping it up, guys. So Dan, tell us what the deal is today.
I got a quote. It's from Mick's old boss, Linda Raschke. I really like this one, actually. The most difficult task in speculation is not prediction, but self-control. Successful trading is difficult and frustrating. You are the most important element in the equation for success. I think it talks about that self-control. Self-control is what you have to have to not go all or nothing.
There's just not enough self-control out there in the world. I struggle with it. We've seen Hollywood actors struggle with it lately. We've seen everyone's got self-control problems. So, Hogue, with that, why don't you sign us off for today?
Sure. All I can say is act like the casino, not the gambler. Risk not thy whole wad.
We'll see you next week, everybody.